The stock market is rigged. At least that's what the rich dad poor dad guru believes. He's calling it a massive scam, and if you don't wake up now, you might be playing right into it. But don't worry, he's got a way out that could absolutely flip your financial game. In this video, we will be breaking down why Robert Kiyosaki is sounding the alarm on the stock market and also reveal what he says you should do instead. If you have ever felt like the system is stacked against you, maybe this is the wake-up call you have been needing all this time. Blindly trusting the market can cost you everything. So if you want to protect and grow your wealth, watch till the end and learn Kiyosaki's strategy to build your financial security. The stock market gamble. Now, Kiyosaki has often compared investing in the stock market to gambling in a casino. He argues that while many investors believe they are making smart, calculated decisions, they are often at the mercy of factors beyond their control. And that is kind of true. Okay, let's illustrate this with an example. Imagine you invest $100,000 in the stock market, expecting an 8% return. Everything seems fine until a downturn wipes out 23% of your investment. On the other hand, imagine taking that same money and investing in a business or real estate. Even though these investments require more hands-on efforts, they have the potential to generate significantly higher returns and provide a level of control that stocks do not. So that just proves Kiyosaki's point. The volatility of the stock market makes it an unreliable wealth-building tool. One year you might see great gains, and the next, your portfolio might crash. This unpredictability makes it so difficult to plan for long-term financial security in a stock market. The psychological trap of stock market investing. There is another factor that we would like to point out. It's how this market is driven by cycles of fear and greed, causing people to buy high and sell low. The media hype and financial institutions play a significant role in manipulating public perception. This often leads to people making impulsive investment decisions based on short-term trends rather than solid financial principles. When the market soars, investors feel invincible and pour in more money, often ignoring the underlying risks. Conversely, when a crash occurs, fear takes over and people panic sell at a loss. This emotional roller coaster keeps many investors from achieving long-term financial stability. The government's role. One of Kiyosaki's biggest concerns about the stock market is its extreme dependence on government policies, especially the Federal Reserve's approach to money printing. In an interview with Fox Business, he warned us that the government's habit of printing money to keep the economy afloat is creating a much larger and more dangerous bubble than we realize. He stated that it's all riding upon debt. It's how long will people keep allowing us to keep printing money? We know that when the government prints money, it devalues the currency, which leads to inflation. This affects stock prices, housing costs, and overall cost of living. It's frustrating to even think of. This is why Kiyosaki argues that this endless cycle of debt-fueled growth cannot continue indefinitely, and he predicts that eventually there is going to be a major market collapse when trust in the system erodes. Commenting further on his strategy, he added that when money is printed without being tied to real assets like gold or silver, its value becomes unstable. This creates an illusion of economic growth, but in reality, it just weakens the financial stability of the country. So if you're an investor who relies on the stock market, this means that your wealth is vulnerable to sudden crashes caused by factors entirely out of your control. Lack of control. Kiyosaki has always criticized the lack of control that individual investors have in the stock market. See, when you buy a stock, you're essentially putting your money into a company that you have no say in. You cannot make business decisions, adjust operations, or influence company direction unless you own like majority of the shares of that company. Instead, you are at the mercy of the company's leadership, economic conditions, and the unpredictable nature of the market. On the other hand, if you choose to invest in businesses or real estate, that can allow for direct control. Let's say you own a business, then you can increase profits through strategic decisions. Or if you own real estate, you can renovate and manage properties to increase cash flow. So Kiyosaki argues that this level of control provides a much more stable and reliable way to build wealth compared to passive stock market investing. Rather than hoping for stock prices to appreciate, he thinks that you should take a more active approach by managing your own assets. The alternative. So, if the stock market is a scam, what should you do instead? Don't worry, Kiyosaki has got you covered for that too. His philosophy mainly revolves around cash flow investments, basically assets that generate consistent income rather than relying on speculative appreciation. One example that Kiyosaki provides is investing in real estate. Consider putting $50,000 into a small business such as coin laundry. This may not be a glamorous investment, but it can at least generate a stable income for you. Instead of relying on market ups and downs, you can just work a few hours a day managing the business, eventually scaling it up. Over time, this investment could generate hundreds and thousands of dollars annually, all while providing you with a steady cash flow. Another example can be investing in commodities like gold, silver, and even Bitcoin. Kiyosaki believes that these assets have intrinsic value because their supply is limited, unlike fiat currency, which governments can print indefinitely. Often during his interviews, Kiyosaki has called Bitcoin a new asset class because he sees it as a hedge against the instability of traditional financial markets. Gold and silver, in particular, have been used for centuries as stores of value, and he believes that this will continue to hold their worth even in times of economic crisis. The real problem. Beyond the unpredictability and volatility of the stock market, Kiyosaki's skepticism is tied to his concerns about national debt. He argues that the government's rising debt levels make the stock market an unsustainable investment vehicle. We all know how the US national debt has skyrocketed in recent years, and Kiyosaki believes that this is a ticking time bomb. He predicts that as debt levels continue to rise, the stock market will become so increasingly unstable that it's going to take all of the investors down with it. Eventually, when debt reaches an unsustainable level, the government will obviously be forced to make drastic economic decisions that could have catastrophic effects on investors like you who have put their trust in stocks. Furthermore, Kiyosaki also warns that the debt problem extends beyond just the US. Many developed nations are experiencing rising debt burdens, and he predicts a global financial crisis could occur if governments fail to rein in their spending. So as an investor, you have to be prepared for this possibility by shifting your focus towards tangible assets that hold value independently of government-backed financial markets. Ditching the stock market? While Kiyosaki's views may be controversial to some, they do offer a very important perspective for investors to consider. He is not necessarily saying that you should not be investing in stocks or that investing in stocks is a guaranteed way to lose money, but rather that it is a risky strategy for building long-term wealth. If the government continues printing money, if inflation rises, and if debt continues to spiral out of control, you as a stock market investor can face significant losses, and all he wants to do is help you avoid that. So instead of blindly following conventional advice to invest in stock market for the long haul, Kiyosaki urges you to educate yourself on financial management, seek out opportunities that provide real cash flow, and invest in assets that you can have control over. He believes that you have to take responsibility for your financial education and seek out investment opportunities outside of Wall Street because that might be a better position for long-term success. It's high time to let go of those stressful investing strategies. You have to start focusing on the opportunities that are better for you now. One thing's for sure, the rich play by different rules, and if you're not paying attention, you're the one getting played. What do you think about Kiyosaki's ways? Let us know in the comments below. If you found this eye-opening, smash that like button, and don't forget to subscribe for more financial insights. See you in the next video!